Good afternoon, this is Velenski with Driving Markets, driving while talking about markets, not today in the studio. Okay, so let's have a look at what's going on in the US. You've got a massive surge in the Nasdaq, you've got the Dow which is following on in the S&P, but where is that surge? What is driving markets as far as the US is concerned? Well, markets are being pushed on by the 7 mega companies, the Alphabets, the Apples, the Amazons, the Microsoft, the Meta, the Tesla and the Nvidia, the 7 mega companies, all worth in excess of $1 trillion. And that is what is driving markets at the moment. And if you take those 7 mega companies out of the equation, markets would be falling dramatically. The Fed has an interest, and as well as the Biden administration, in keeping the US stock market high, especially in an election year. It's got an election coming up in November 2024. Of those 7 mega companies, Nvidia has been the one that's been the most active, expected to have profits going from 1.4 billion last year to over 10 billion this year. And that's why the valuation of Nvidia has shot up. But overall, where is the Nasdaq going? What's happening with these 7 mega companies? Well, at the moment it's got momentum, and it looks like the traders on Wall Street want to push the Nasdaq up to a higher level above 18,000, and from there looks like there'll be a major correction. But we need to look at some red flags on the horizon. You've got the geopolitical issue, which is the Houthis firing on shipping in the Red Sea. You've got war in Israel with Hamas, Israel, Lebanon, Iraq, Syria and Iran, which is a large part behind all of those terrorist-backed groups in the Middle East. You've got Ukraine, Russia, you've got China, Taiwan, you've got potential inflation rising in Europe and in the UK and in the US, and all of that is not yet being priced in to any financial markets. The financial markets are focused on one thing: 6 rate cuts from the Fed in 2024. The Fed's already given notice back in November they're going to reduce rates by at least 3 times, 1, 2, 3 at least, and the analyst on Wall Street priced in 6 times, and therefore that's all priced into the market, cheaper money. But as money becomes cheaper, what you're going to have is a trending up in inflation. You've already got problems with wage inflation in the US, and you're going to have CPI, Consumer Price Index, and retail inflation trending up. So there's plenty of red flags out there. In addition to that, in the US, you've got a major banking crisis about to pop in March 2024, when the US regional banks have to repay $135 billion of temporary loans from the US Treasury that was given to them as a result of the last banking crisis in March 2023, when Silvergate, Silicon Valley, First Republic all went bust. And there'd be more US regional banks that are on the verge of bankruptcy, but the Fed will come in and rescue them and therefore avoid a regional banking crisis up until the election. They'll probably leave that for Trump to sort out when he gets in November 2024. So you've also got rising US 10-year yields. That's also going to put a dampener on things. In addition to that, you're going to have rising unemployment with the layoffs coming in from Google, Xerox, Amazon and Citigroup, to name but a few, and Meta are going to lay off thousands of staff. So you've got a lot of red flags out there that have not yet been priced into the market. And when that is priced into the market, you can expect markets to fall and fall significantly. However, with manipulation from the Fed and the US Treasury, with collaboration with Wall Street, they'll do everything possible to keep stock markets at all-time highs and even moving higher, to give the members of the public the feeling that everything is really hunky-dory. But behind the scenes, there's a lot of shenanigans going on. This is Velenski with Driving Markets. Catch you later.